Imagine this. You wake up in the morning, open your banking app, and see the same number sitting there. Your money is still there. No alerts, no warnings, no bad news. You feel safe, but somewhere outside your apartment, in the invisible machinery of the global economy, something is quietly eating your wealth alive. No robbery, no fraud, no headline, just time. This is the uncomfortable truth nobody likes to talk about. Keeping your cash in the bank feels safe, but historically, it's one of the most dangerous things you can do with money, not because banks are evil, not because money disappears overnight, but because the system is designed to slowly, silently drain value from idle cash, and the people who understand this don't panic. They move. On paper, banks look like fortresses, glass towers, vaults, regulations, insurance. They promise safety, stability, control, and technically, they deliver exactly that. Your number doesn't vanish. What they don't protect is purchasing power. Inflation is not loud. It doesn't kick down doors. It creeps. Every year, your money buys a little less food, a smaller house, fewer years of freedom. You don't notice it day to day. You notice it decade to decade. After 2020, the illusion cracked. Governments shut down economies. Central banks panicked. And with a few keystrokes, trillions of dollars were created out of nothing. The U.S. Federal Reserve alone expanded its balance sheet from under $4 trillion to nearly $9 trillion in less than 2 years. Europe followed. Japan followed. Everyone followed. More money chasing the same goods always ends the same way. Prices rise. Savings shrink. And cash holders pay the price. History has seen this movie before. In 1923 Germany, people carried wheelbarrows of cash just to buy bread. In Zimbabwe, trillion-dollar notes became souvenirs. In Venezuela, bank balances existed, but stores were empty. Different countries, same ending. Cash survives systems. It does not survive broken systems. And this is where the wealthy behave very differently from everyone else. They don't see cash as wealth. They see it as fuel, a temporary holding place before money moves into assets that fight inflation instead of surrendering to it. Gold was one of the first lessons. Humanity learned the hard way. Empires collapsed, currencies died, borders changed. Gold stayed, not because it's magical, but because it's scarce, tangible, and politically neutral. It doesn't care who's in power. It doesn't care what language you speak. When confidence disappears, gold absorbs fear. That's why central banks still hoard it. That's why during every major crisis, 1970s inflation, 2008 financial crash, COVID uncertainty, gold quietly returned to relevance. It doesn't make you rich fast. Keeps you poor slowly. Then there's land. Civilizations rise and fall. But land never goes to zero. Buildings age, markets crash. Governments change laws, but land remains. Real estate has one unfair advantage. It benefits from inflation. As prices rise, rents rise. As currencies weaken, property values adjust upward. Debt becomes cheaper. Income grows. That's why generational wealth almost always touches real estate at some point. Not because it's exciting, but because it works. Stocks tell a different story. They're loud, emotional, terrifying in the short term. But over time, they tell the story of human progress. The S&P 500 didn't grow because numbers went up. It grew because companies solved problems, created value, and expanded productivity over the past century, despite wars, crashes, pandemics, political chaos. Long-term stock markets rewarded patience, not speculation. Patience. The irony is that most people abandon stocks exactly when they become most valuable during fear. Then came the digital rebellion. Bitcoin didn't start as an investment. It started as a question. What if money didn't need banks? What if trust was replaced by math? Volatile, misunderstood, and dangerous for the uninformed. Crypto exposed something deeper. People were losing faith in the system, holding their cash. Not everyone needed Bitcoin, but everyone needed to understand why it existed. When markets panic, bonds step forward quietly. They don't excite. They stabilize. Government bonds from stable economies don't make headlines, but they cushion crashes. They're the ballast that keeps portfolios upright when everything else tilts. Wealthy investors don't chase returns with bonds. They buy time. Then there's ownership. Owning a business means owning pricing power. Inflation rises, prices rise, costs increase, margins adjust. That's why entrepreneurs and shareholders rarely fear inflation the way savers do. They participate in the economy instead of sitting underneath it. Commodities remind us of something modern finance often forgets. The world runs on physical reality: oil, wheat, copper, energy. When supply chains break or wars erupt, these assets don't negotiate, they spike. In 2022, energy and food prices surged, not because of speculation, but because reality intervened. Money is an abstraction. Resources are not. And yet, it's the most powerful asset. Never appears on a balance sheet. Knowledge: you can confiscate property. You can freeze accounts. You can inflate currencies. But you cannot erase understanding. Financial literacy is the only asset that survives every system failure. It's the difference between panic and positioning. This story isn't about hating. Banks are tools. The danger comes from mistaking tools for solutions. Cash is useful. Liquidity matters. But stagnation is expensive. The people who lose aren't reckless. They're comfortable. They wait. They trust the number on the screen. They assume stability. The people who win don't gamble. They move deliberately. They diversify. They understand history. Money was never meant to sleep. It was meant to move. And the moment you understand that, cash stops being your safety and starts becoming your starting point.